Hello, Mark Sturdy here with some highlights of our work this week. Looking at the summary page, you will see that we are pulling back from clarity in the currencies. We are now bullish in the S&P and the EuroStoxx 50, having both of those having broken into new all-time highs. Less true of the FTSE and the Nikkei. We are not involved in bonds, but we are increasingly excited by what's going on there, and I'll come back to that. And we remain bears of gold. Let's look first of all at our neutrality in the stocks, in the foreign exchange, and look, for example, basically the sideways price action. There's no top formation forming here. It's going nowhere. There is a slow appreciation of the dollar, of the euro, but nothing exciting. Same there. Nothing going on in the currencies. Let's move straight to the stocks. Here, the drama is, as you might expect, the breaking into new ground of the S&P 500 on the week break up above 7693, 7693, the immediate prior high, which is we know driven by this completed triangle, which suggests very much higher, certainly around 8,000. More to go. The EuroStoxx 50 is the same sort of thing, broken into new ground. Both of those very hot to trot, going to go further, breaking with good supports beneath the market. Less true of FTSE, is not into new ground. It's still pausing beneath 10,944. Similarly, the Nikkei, which was weak, has bounced, but is nonetheless still way short of its recent all-time high. Now, the real excitement for us is the ongoing pressure inside the bonds for higher rates across the board. Here's the big picture, very bearish weekly chart in the Treasury notes, the US Treasury notes. There isn't yet a breakdown in the prices, but there is in yields. This is the yield bounce. So that's the bunds now, similarly bouncing yields. All of these, once again, the price action hasn't shown it yet. We need to have this little catalyst of a breakdown through prior lows in the prices. When that happens, there'll be fresh selling of bonds price-wise, buying of yields. The gilt is a little bit of a, even though the long-term chart is very bearish in price terms, there is a lack of clarity in the shorter-term charts, in big trading range here, in the daily yield chart, for example. So it's the T-note and German bonds leading the way. Oil is in a trading range, nothing much to report, very arguably a short-term blip in prices to come from this completed bull falling wedge. Gold, we think, remains bearish. We like this pattern here. It's right up against the neckline. It's coming into resistance price-wise here. We think the market, unless it can do very much better, looks to be ready to fail and an ongoing bear situation suggesting very much lower. Thanks very much.